Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today we are examining a discussion that has attracted attention among followers of the Iraqi dinar. The comments focus on the belief that a potential Iraqi dinar revaluation, if it were ever to occur, could coincide with a period of significant global financial uncertainty, including market volatility, concerns about inflation, and declining confidence in fiat currencies. The discussion also suggests that investors should consider commodity-based assets after any potential gains from the dinar, and claims that disciplined investing could multiply returns many times over. While these ideas are widely debated within certain investment communities, it is important to separate personal opinions from confirmed economic developments. In this video, we will carefully analyze these claims, explore what current economic principles tell us, and discuss what they could mean for followers of the Iraqi dinar from both a short-term and long-term perspective. Whenever discussions about the Iraqi dinar become popular, they often expand beyond Iraq itself and begin incorporating broader themes involving the global economy. In this case, the central argument is that a major adjustment to the Iraqi dinar would happen during a period of worldwide financial instability. The reasoning behind this belief is that major monetary shifts historically occur during times of economic stress rather than periods of stability. While history certainly shows that financial crises have sometimes accelerated economic reforms, it does not automatically mean that one specific currency will be revalued because global markets experience turbulence. Financial history provides numerous examples of governments implementing monetary reforms after severe economic disruptions. Countries experiencing inflation, banking crises, or fiscal restructuring have occasionally adjusted exchange rate policies. However, every case has been unique, driven by domestic economic conditions, central bank policies, foreign exchange reserves, debt obligations, productivity, and political stability. No universal rule exists stating that a currency appreciates simply because global markets become volatile. When examining Iraq specifically, several domestic factors remain far more important than general global uncertainty. The Iraqi economy continues to rely heavily on oil exports, making government revenues closely linked to international energy prices. The Central Bank of Iraq focuses on maintaining monetary stability, managing foreign exchange reserves, supporting confidence in the banking sector, and controlling inflation. Government reforms aimed at modernizing banking infrastructure, expanding digital payments, strengthening anti-money laundering measures, and improving financial transparencies also remain central to Iraq's long-term economic strategy. These are measurable policy developments that analysts can monitor. By contrast, predictions that connect a hypothetical currency revaluation directly to a future global financial crisis remain speculative because they are not based on official announcements or confirmed policy decisions. The discussion also raises concerns regarding fiat currencies. Fiat money refers to currencies that are not backed directly by physical commodities such as gold or silver, but instead derive value from government authority, central bank credibility, and public confidence. Nearly every major economy today operates using fiat currency systems, including the United States dollar, the euro, the British pound, the Japanese yen, and the Iraqi dinar. Critics often argue that expanding money supplies and persistent inflation weaken fiat currencies over time. Supporters, however, point out that modern central banks possess numerous policy tools designed to stabilize inflation, adjust interest rates, and respond to changing economic conditions. Reality generally falls somewhere between these perspectives. Inflation can certainly reduce purchasing power if left unchecked, but it does not automatically lead to the collapse of fiat monetary systems. For Iraqi dinar followers, understanding this distinction is extremely important. General concerns about inflation or fiat currencies do not necessarily predict changes in Iraq's exchange rate policy. Iraq's monetary decisions are influenced primarily by domestic economic objectives, rather than broad philosophical debates regarding global currency systems. Another important element mentioned in the discussion involves the possibility of significant inflation occurring around the same time as a potential Iraqi dinar adjustment. Inflation has indeed become a major concern in many countries over recent years. Rising food prices, energy costs, supply chain disruptions, geopolitical tensions, and changes in monetary policy have all contributed to periods of elevated inflation across different regions. However, inflation affects countries differently. Some economies experience temporary price increases, while others face more persistent inflationary pressures. Iraq itself monitors inflation carefully because price stability remains essential for maintaining purchasing power and preserving confidence in the domestic financial system. Central banks generally attempt to balance inflation control with economic growth. If inflation rises excessively, policymakers may tighten monetary conditions. If economic growth slows dramatically, they may pursue more accommodative policies. These decisions are based on extensive economic data rather than speculation about future exchange rate changes. The discussion also introduces commodity-based assets as a possible investment strategy after potential gains from the Iraqi dinar. Commodities include physical assets such as gold, silver, oil, copper, agricultural products, and other raw materials. Historically, some investors have viewed commodities as a hedge against inflation because tangible assets sometimes retain purchasing power during periods of rising prices. This is a concept that receives serious attention within mainstream financial markets. Institutional investors, pension funds, and portfolio managers often include commodities as part of diversified investment strategies. However, commodities themselves are far from risk-free. Gold prices fluctuate. Oil markets can experience significant volatility. Agricultural commodities depend on weather conditions, global demand, and geopolitical developments. Therefore, while diversification into commodities may be appropriate for some investors, depending on their financial objectives and risk tolerance, it should never be viewed as a guaranteed strategy for preserving or multiplying wealth. Perhaps the most striking statement in the discussion is the suggestion that disciplined investing after hypothetical dinar gains could potentially produce returns of 50 times, 100 times, 1,000 times, or even 10,000 times the original gains. This claim deserves careful examination because extraordinary return projections can create unrealistic expectations. Financial markets have certainly produced remarkable success stories throughout history. Early investors in innovative technology companies, successful entrepreneurs, or rapidly expanding industries have sometimes generated extraordinary long-term returns. However, these cases represent exceptional outcomes rather than typical experiences. Professional financial advisors generally emphasize diversification, risk management, long-term planning, realistic expectations, and disciplined investing instead of focusing on extremely large return projections. Even experienced institutional investors recognize that substantial returns are usually accompanied by significant uncertainty and risk. For Iraqi dinar followers, this distinction matters because successful investing is rarely driven by one event alone. Building wealth typically involves careful planning, asset allocation, continuous education, tax considerations, liquidity management, and adjusting strategies as economic conditions evolve. The discussion also reflects an interesting psychological aspect that appears frequently in investment communities. Many investors naturally think beyond the initial investment outcome. Instead of focusing solely on whether one asset increases in value, they begin asking what should come next. This shift in thinking can actually be constructive if approached responsibly. Long-term financial planning should always involve considering how assets fit into broader financial goals. Investors often evaluate emergency savings, retirement planning, income generation, diversification, debt management, education funding, and wealth preservation, rather than concentrating exclusively on one investment. Viewed from this perspective, discussions about what to do after any investment gains become much more meaningful than attempting to predict extraordinary future returns. Turning specifically to Iraq's economy, the country's long-term prospects continue to depend on several structural reforms. Economic diversification remains a major objective, reducing dependence on oil revenues, encouraging private sector growth, expanding infrastructure investment, modernizing financial institutions, improving tax collection, attracting foreign direct investment, and increasing employment opportunities all contribute to sustainable economic development. If these reforms continue successfully over many years, they could strengthen overall economic fundamentals. Stronger fundamentals generally support greater investor confidence. Although they do not automatically determine exchange rate policy, banking reform also deserves attention because Iraq has invested considerable effort in modernizing its financial system. Expanding electronic payment systems, strengthening banking supervision, improving compliance with international financial standards, and increasing public confidence in banks all represent important steps toward integrating more fully with the global financial system. These reforms may not attract dramatic headlines every day, but they often have greater long-term significance than short-term market speculation. Investors frequently overlook gradual institutional improvements because they develop over years rather than weeks. Global financial conditions nevertheless remain relevant for Iraq. Oil prices influence government revenues. International trade affects exports and imports. Global interest rates influence investment flows. Regional geopolitical developments impact investor confidence. Exchange rate movements among major currencies also affect international commerce. Therefore, while global turmoil alone does not guarantee changes in Iraq's currency policy, international economic conditions certainly form part of the broader environment within which Iraqi policymakers operate. Another important consideration involves expectations. Financial markets respond not only to current economic data, but also to future expectations. If investors expect reforms to improve economic performance, confidence may increase even before measurable results appear. Conversely, uncertainty can reduce investment, even when current conditions remain relatively stable. Managing expectations therefore becomes a key responsibility for governments and central banks. Clear communication, transparent policymaking, and credible economic strategies help reduce unnecessary speculation. For Iraqi dinar followers, patience remains an important principle. Major economic reforms generally unfold gradually rather than overnight. Banking modernization, fiscal reforms, infrastructure development, private sector expansion, and institutional strengthening require years of consistent implementation. Economic transformation rarely follows a straight path. Progress often includes setbacks, policy adjustments, external shocks, and changing political priorities. Investors who understand this complexity are generally better prepared to evaluate developments objectively. The discussion also highlights the importance of financial education. Regardless of whether someone follows the Iraqi dinar, commodity markets, stock markets, or other investments, understanding basic economic principles provides a stronger foundation for making informed decisions. Concepts such as inflation, interest rates, exchange rates, diversification, liquidity, volatility, risk management, and asset allocation become increasingly valuable during periods of economic uncertainty, rather than relying solely on optimistic predictions or pessimistic forecasts. Informed investors benefit from examining official economic reports, central bank communications, government policy announcements, international financial institution assessments, and reputable financial research. Critical thinking also plays an important role. Whenever exceptionally large return projections appear, investors should ask what assumptions support those projections, whether those assumptions are realistic, and what risks could prevent those outcomes from occurring. Balanced analysis considers both opportunities and uncertainties. One practical lesson emerging from today's discussion concerns diversification. Many experienced investors avoid concentrating all their capital in a single asset class. Instead, they spread investments across different sectors depending on their objectives, investment horizon, and tolerance for risk. Diversification cannot eliminate investment risk, but it may help reduce the impact of unexpected developments affecting any one particular asset. For followers of the Iraqi dinar, maintaining realistic expectations is equally important. Economic reforms can improve a country's long-term prospects, but financial markets remain influenced by numerous domestic and international variables beyond any single narrative. The relationship between economic growth and currency values is also more complex than many people assume. Strong economic growth does not always produce a stronger currency. Likewise, weaker growth does not always produce a weaker currency. Central bank policies, trade balances, capital flow, foreign reserves, inflation expectations, productivity, and fiscal policy all interact in determining exchange rate dynamics. This complexity explains why professional economists rarely make absolute predictions regarding future currency values. Looking toward the short term, followers of Iraq's economy are likely to continue monitoring developments involving banking reforms, fiscal policy, oil market conditions, inflation trends, government initiatives, and Central Bank of Iraq communications. These measurable developments provide more reliable information than generalized speculation. Over the longer term, Iraq's success will depend largely on sustaining institutional reforms, strengthening economic diversification, improving governance, encouraging private investment, and maintaining financial stability. These factors collectively shape the country's economic outlook, far more than isolated predictions regarding future exchange rates. The broader global economy will also continue influencing Iraq through trade, investment, commodity prices, and financial market conditions. However, domestic policymaking remains the primary driver of Iraq's long-term economic trajectory. Ultimately, today's discussion reflects an idea that resonates with many investors: the belief that major opportunities often emerge during periods of uncertainty. History does show that economic transitions sometimes create opportunities, but it also reminds us that uncertainty increases risk. Responsible investing therefore requires careful analysis, realistic expectations, disciplined planning, and ongoing education, rather than relying on extraordinary projections. For Iraqi Dinar followers, the most constructive approach is to remain informed, monitor official developments, understand the broader economic context, and evaluate information critically. Distinguishing between confirmed policy actions and personal opinions allows investors to make more balanced decisions and avoid unnecessary emotional reactions. As Iraq continues pursuing financial modernization and economic reform, there will undoubtedly be continued discussion regarding the future of its currency. Some opinions will be optimistic, others cautious, and many will remain speculative. The most reliable foundation for understanding these developments will always be official economic data, transparent policymaking, and credible financial analysis. Thank you for watching today's analysis. If you appreciate responsible, balanced, and factual coverage of Iraqi dinar developments and Iraq's economy, please subscribe to the channel and like this video so you never miss future updates. As always, this content is provided for informational and educational purposes only. It should not be considered financial, investment, or legal advice, and viewers should conduct their own research and consult qualified financial professionals before making any investment decisions.